No, money's just rushing into bonds. You got the 10-year down at a 208, but yeah, the market's been pretty interesting. I think it's really almost priced for perfection when you look at what's coming with this cut here in an hour. Well, I don't think we're going to have a cut here in an hour. I think the language is going to change a little bit to be a little bit more patient. But a 180 from where we were 6 months ago, right?
Who would you say is more priced to perfection, the bond market or the stock market?
It's interesting. I'm going to say the bond market. I think that's where the most crowded trade is right at this particular moment. So money just continues to pour in. So I think people need to be a little cautious on both, frankly.
When you talk to clients, to other, colleagues in the market, do you hear anyone saying, I'm shorting bonds right now? I'm selling those things. I'm not buying them. Is anybody in that position?
No, and what's also interesting, people are also rushing into cash. You're seeing cash be one of the larger allocations in a portfolio these days as well. So people are a little bit cautious on the equity markets, and I think that's maybe making me a little bit more bullish the more skeptical people are.
Sure.
But I'm going to wait for that VIX to spike. It's kind of, you can see some complacency in the market.
See a flush, you mean?
I want to see it spike up to the 30s or something like that.
Wow.
And I think you could see that if something doesn't happen at this G20 meeting on June 28th.
Okay.
I don't see some magical deal happening all of a sudden.
Okay,
So,
that's interesting because
yeah.
Andrew, look, you guys are not in the camp calling for any rate cuts this year, right?
Yeah, so we're one of the banks that's still holding out, thinking that the Fed can make it here without cutting. But like everyone's saying, there's a lot that's priced in right now, so we really have to see how the data come in and what happens with the trade issue.
Why don't you have rate cuts priced in? Why do you think the economy's strong enough on its own? Are you not, looking at low inflation and saying, hey, this is a sign that rates are too high?
So the interesting thing is there's really not a lot of debate that we get around the idea that the economy is strong enough right now that you don't need these rate cuts. So there's nothing really pressing for a near-term rate cut in the data. It's really the downside risks around that data. So yes, should we get another negative payrolls report, should we get a negative outcome at the G20, then I think it is a Fed that's going to be looking to think about cutting rates, and you'll see them setting the table for that at this meeting. But do we actually get there? And we're not there yet. And the likely scenario is that we don't get there. And I think that's what's being underappreciated by markets right now.
Yeah, I'm stunned by what Steve told us, that at the March meeting, which was just a couple months ago, Fed members were looking at 0 cuts this year and then hikes in 2020. Andrew, what do you think is an appropriate outcome of this meeting in terms of both reflecting, kind of some of the cuts that are obviously priced in by the market now, some of that concern, but also saying, hey, it's too early to tell on the economy and the G20.
Yeah, so I think we'll get exactly that kind of central scenario that Steve was talking about. The committee's closely monitoring now, and that's a big shift because they were really patient, and they were patient thinking about maybe hikes a few months ago. Now it's closely monitoring, thinking about downside risk, and really important is, do we get that language that they're prepared to act as appropriate? Chair Powell's already said that. If we get that in the statement, that's a pretty clear signal that should conditions not materialize in a positive way, this is a Fed that's going to come in and provide some accommodation. So I think that's kind of the perfect way to split the difference here between you're not cutting now and you're not signaling that you're necessarily going to cut, but you're making it pretty clear that that accommodation is going to come through should it be needed.